Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. The rental boom in Australia might be over, with rent increases across most capital cities stalling. Domain's rent report shows that after the steepest and longest rental surge in history, annual rent rises for houses have hit multi-year lows in Sydney, Melbourne, Brisbane, Perth and Adelaide. Dr. Nicola Powell is Domain's Chief of Research and Economics. Nicola, welcome back to Fear and Greed.
Hi, thanks for having me on again.
So, is this it? Is this the end of the rental boom? We're not saying they're going backwards, but is it the end of the big increases?
Oh, absolutely. I think that explosive rental growth that we've seen over the last 4 years is absolutely in the rear view. You know, we've got to remember it is still a landlord's market, technically still a landlord's market across all of our capital cities, but we've got a deceleration of rental growth quite rapidly, actually, across many capital cities, across most of them. And so what it's actually shown is we are past that peak rate of rental growth, and we've even got some capital cities in decline. So Brisbane declined over the quarter, both for house and unit rent. So I actually think that's quite a surprise. You've got to remember that Brisbane is still a landlord's market, and I think it really showcases the financial strain that tenants are under.
Okay, so if we dig into that a little bit, it's a landlord's market. Does that mean that there isn't a lot of rental stock available? Is that what that means? And if that's the case, why are prices stalling or price growth stalling?
Yeah, so it is still technically a landlord's market. So the vacancy rate, we like it to sit between 2 and 3% to be balanced between landlords and tenants. And at the moment, every single capital city still has a vacancy rate below 2%. But I think the key change has been vacancy rates are improving. So what we are seeing, the way I would describe it, is a rebalance between supply and demand. It's still not yet balanced, but it's improving. And that is because couple of reasons. We've got demand side pressures easing, but we've also got supply increasing also. You know, one of the biggest changes has been the increase in investment activity. And when you look across all the states and territories, the participation based on lending finance to investors is now above the decade average across every single capital city, and it's rising year on year. I'll caveat that with the only state that deviates from that is Victoria.
Okay, so just parking Victoria, it goes against kind of what I thought was going on. You're saying so there is actually a lot of investor, maybe it's not new stock coming on the market. Is that the issue? It's actually investor buying old stock and therefore renting it out because we still have the housing crisis. We still don't have enough homes.
Yeah, absolutely. I think it is investors buying that older stock. I mean, there is obviously that new stock coming on also, but I think it's a balance between that demand and supply, that rebalance occurring. So when you look at the demand side pressures, net overseas migration has fallen from its peak, and we know that a large portion of people arriving from overseas tend to rent. And when you look at the stats, net overseas migration is now 19% below the peak that was back in March of 2023. And that peak of net overseas migration actually aligns to the peak rate of rental growth also. So we've got a slowdown in people arriving from overseas. But I also think, it's not the sole reason, I also think that we are seeing affordability barriers actually driving demographic shifts. And I think it's really prompting tenants to reevaluate how are they going to financially manage. So it does mean that you see these scenarios of increased household formation. And what we mean by that in the rental market is people get a housemate or they move back in with mum and dad in order to cost cut. So that takes away some element of demand pressure.
Okay, and the point here is that rents are still really high. It's expensive to live in some of these cities. Not Melbourne. Well, sorry, Melbourne might be expensive, but it's one of the least expensive. Is that right?
That is right. And I think this is the key nuances really of this rent report is, there's two main messages. One is rent growth is absolutely slowing. Vacancy rates are improving because we've seen supply start to rise. But we have to remember it is still technically a landlord's market and tenants are still facing record levels of rent pricing. And layer that with cost of living pressures, it really has been a challenging time, I think, financially. Tenants are under financial strain. And I think that financial strain is really shifting decisions on where they live, who they live with, compromises they're going to make in terms of suburb, in terms of property type, or, foregoing that extra bedroom. And I think we have to remember as well, there's a lot of tenants really locked into the rental market because we've got such high purchasing prices, particularly in a market like Sydney. So what that means is people are renting for longer because the ability to actually save, to purchase their first home, that goalpost continues to nudge further and further away.
Stay with me, Nicola. We'll be back in a minute. My guest this morning is Dr. Nicola Powell from Domain. What are the reasons that a house in Sydney, I'm going to get the numbers wrong, Nicola, so correct me if I'm wrong, I think the median was 775 and a unit was about 720. I think Melbourne was 580 and 550, if I get that right, thereabouts. Why is it so much cheaper in Melbourne than Sydney?
Well, you've got that 100% right. So that's brownie points there.
I'm proud of myself,
well
absolutely.
done. Great memory. Overall, Melbourne's been a really interesting market, and Melbourne's been the one really that's bucked compared to other capital cities. We haven't seen such strong rates of rental growth during the peak of the pandemic. And the interesting dynamic, particularly for the rental space, is investors aren't really going back into Melbourne's property market because it really has weak growth potential. And we know that investors chase that capital growth. That's what they look for. So they're shying away from Melbourne. They're looking towards more affordable markets, but also there's been taxation changes. So there's a bit of a buyer segment shift going on in Melbourne. And I think that what we're seeing is investors are a dwindling buyer pool, but actually first home buyers are taking that advantage. And we have seen first home buyers go back into Victoria and Melbourne's housing market. And I think competition is certainly less in Melbourne compared to some of the other capital cities. Supply overall in the sales market has been much better relative to other capital cities, still above that 5-year average. And I think what that has provided is quite great conditions for first home buyers because prices have pretty much stagnated over the last couple of years. And I think it's really coming out in the lending data because we have seen first home buyers increase. And if we're seeing a rise in first home buyers, logically, that means that demand is easing on the rental side in Melbourne. And I think, Melbourne is much cheaper overall anyway when you look at purchasing and also renting.
Okay, so Adelaide, Brisbane and Perth, you can't really say they're outliers because there's 3 of them, but just like in the auction market, the rental market, they're still pretty strong. And I know they probably have peaked, but you're still getting some decent rental returns in those markets.
And they are still very competitive. I think particularly Adelaide and Perth, when you look at Adelaide, 0.4 is the vacancy rate, Perth, 0.5. It's extraordinarily tight and competitive for tenants. But it does appear that rental boom is slowing. I think we've definitely seen looping back to the conversation we were having earlier, we certainly have seen greater levels of investor participation in a market like Perth. Not enough to really shift the dial on its vacancy rate, but the vacancy rate is still increased. It's still increased from those extraordinarily low points of 0.2, 0.3% that we were seeing in those markets. And I actually think this is probably where that affordability ceiling, there's absolutely an affordability ceiling in the rental space. And that's where we see that affordability ceiling reshaping demand and where we see kind of people moving back home, getting into a house share. And I think that affordability constraint is really playing out in some of these other markets too.
Okay, what about the regionals? Is there any sort of change in trend in the bigger regional places?
Generally speaking, regionals have been a bit more subdued overall. We saw that more kind of stagnant nature of the rental market. We'd seen the focus go back on our capital cities, not only in rents, but also in price growth also. And I think it's an interesting one in the rental space, particularly where we've got a period now where businesses are mandating people return to the office. And that reshapes where rental demand plays out. So generally speaking, it is certainly more subdued conditions in regional Australia. But I would say that those conditions have been subdued for a longer period of time. I think in our capital cities, that slowdown has been more evident in more recent quarters.
Okay, Nicola, just putting your crystal ball gazing hat, if there is such a thing, wizard's hat, whatever it is, what's going to happen? Is this going to keep going? The slowdown in rental growth, and could we end up getting more cities like Melbourne where they're going backwards?
So I do think that we are certainly seeing a better outlook for tenants. And I think that what we are now on is a period of time where we are going to continue to see the rental space rebalance. I think we've got to remember, though, that it is very seasonal in the rental space. We normally see that first quarter of a calendar year is very strong in terms of rental growth. So what we're probably likely to see is a bit of a reacceleration of rental growth over the first quarter of next calendar year. But I think even then it's going to be slower compared to what we had been experiencing or recording. And one of the key metrics, and look, I love to have many different kind of pointers to help me gauge where a particular trend is going. But one of the key ones at the moment is when you look at the number of potential tenants per rental listing. It's now at the lowest level we've seen since 2019. So that tells me that this rental boom is in the rear view and that we are going to continue to see conditions rebalance across Australia.
Does that mean that we're going to, it is a political topic, housing in Australia, and we have an election by the end of May next year. Does this take some of the steam out of the debate? And we're apolitical here. We're not saying it's good or bad, but do you think it will take some steam out of the debate?
It's an interesting one because I think, they're always continuously adding fuel to the fire. When you think about the discussion around negative gearing and capital gains tax, if we see changes in that space, that will have a negative impact on our rental market. We've seen modelling that proves that it does increase home ownership, but it actually doesn't overall decrease pricing by much. You see home ownership increase by about 4%, you see pricing decrease by about 1.5%, but you see rents in turn increase by 4%. So I do wonder, even the increased discussion around negative gearing could have an adverse impact on investor decisions, whether they purchase, what they purchase, whether they go to the share market. So I do think that, I don't know if it alleviates tension. I think governments are very focused on supply. We know we have an undersupplied housing market overall. There are many people in Australia that are underhoused. But I do think that when we think about the changes in the rental space, we are seeing those changes because investors are coming back in. And most investors are mum and dads with one rental property. And build to rent, I don't think has shifted the dial enough. It's still very much in its infancy in Australia.
Yeah.
So who knows? The political space and housing is a very interesting one.
Sure is. Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Domain's Chief of Research and Economics. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.